Hey traders, Nick Shaheen here doing a video on Doge. Yes, Dogecoin, crypto. So no chart left behind is my motto. I'm laughing because the debate is always heated in the chat room in a good way. Everybody's all excited about it. It's fun, it's new, it's tangible. People can do it in and out. For some reason, they treat it different than stocks, but it actually trades just like stocks. So today, I'm going to try to come up with a short-term plan on how to deal with this stupid volatility. Ooh, he said the S word. Oh, dang. Anyway, so crypto, let's talk about it in general. Bitcoin. I'm going to use Bitcoin because everybody knows it, and it was the granddaddy of them, at least the biggest one. I don't know if it was his first. So why is it valuable? I know that either people hate it, and most likely because they don't get it, and you don't have to get it, and I'll tell you why in a second, or they love it, and they don't know why they love it. Some people do, but very few experts in the field, me included. I know charts inside and out. I know the concept. I have a degree in finance, I have an engineering degree, so I can add one and one and get the concept. But the intricacies of it, it's beyond me, and I don't want to spend the time to study it, and I don't need to. Here's the easy way. Why is it valuable? Why is Bitcoin 50,000, 40,000, 60,000, whatever? It's just because people say it. And you're laughing at that, but if you think about it, it's the same thing for gold. Why is gold valuable? Why are diamonds valuable? Because people say they are. Gold is a yellow rock. You pick it up off the ground, it does nothing for you. People decided years and years, centuries ago, I don't know when it started, when the love for gold started, but I would love to see the first conversation. One guy telling another, hey, I'm going to sell you this yellow rock. And the guy would say, why? It's valuable. Why is it valuable? Because it is. What does it do? Nothing. Okay, so same concept. In fact, Bitcoin does something because it's creating the crypto world is pushing us forward in transactions, electronic transactions, stepping away from everything else. The pandemic rushed that. The digitization process just took a giant leap forward, at least in urgency. Now everybody figured out, oh my gosh, we've been on this trend, but we've been dicking around. We need to get this thing on ball rolling, right? So cryptocurrency is serving that progress because everybody's pursuing it. They're coming up with all different kinds of ways and shenanigans to make it happen, period. So is it valuable? Yes, because people say it is. Same as gold, no different. So anyway, that's the easy explanation. Now let's trade this. What is this? Doge. Hard to get any opinion done from the daily chart, clearly. First of all, it's too violent. Second, it's too new. So I start drilling down. But right here, I can tell that on this one day, there were three lines I can draw that were pretty important on that one day. So quick lesson in technical or reading charts, interpreting candles. I'm not a candle guy, but I know how to read them. So they opened and closed about the same place, slightly green. But during that day, they loved it and they hated it. So they were indecisive. So they opened here. At one point, they hated the crap out of it, and they tried to love the heck out of it. And they said, you know what? We have no idea. Let's just kick the can one more day. We'll decide tomorrow. The next day, they opened here. They tried to sell it, and that's today. What is today? May 17th. And then they closed worse than the day before. So this was indecisive, so I'll draw the edges of it, and I'll keep them in mind. 45 and 55. Nice, easy, clean-cut numbers. But if you look, 45 played a role here, too. And here, and here. So, and here, arguably. Right? So here, they hated it. They went far below 45. Then they came back above it and closed above it. And if you split it, it's almost the middle of it. So any which way you slice it, 45 is playing a role in the next couple of days. All right, so let's get smarter with this. On the way up, this was a prior fail. It was a point of contention before. So we're still talking the two edges we just drew. Do I have lines on this thing? I don't. Perfect. So, okay, I'll draw a box to illustrate those 2 points. Why does TradingView not let me put it in the middle so I don't ride this candle? Okay, there. So it's probably a setting on my end here. Snap to. Okay, so this is the box I want to pay attention to. The edges of it are going to matter. And right now they're somewhere in the middle trying to decide. And then let's get smarter by getting more granular. So I'll start with a 2-hour chart. Same box, now tighter look. I can tell you from looking at this, if I don't know what this is, that a move is coming. The bulls and the bears are fighting it out. They have lower highs, higher lows, pinching. So they're coming this way, they're coming that way, they're coming into a point. There's going to be some decisions to be made. They're going to face each other, draw the swords, and hack it out. And the first level that will trigger lower is that bottom candle we talked about. So if this breaks, the bears will jump on it, the machines, whoever is trading it, and we'll try to buy low, sell, and trying to short it into the next level of failure where they'll have another battle, which is here. So as soon as this fails, if I'm long and I'm trading, I stop out. And if I want to catch the falling knife, I will catch it in here with a stop out level right below this one. Repeat the process basically. So if somebody shorted it on the breakdown, they should book somewhere around here, because it's probably going to find buyers trying to bounce out. And if it does bounce out, then the selling machines will hit it on the lower high trend and then try to fail it, and then it'll become like an inverse cup and handle. So I'm not calling for it to go lower. I'm starting with the lower scenario, and then I'll argue the other scenario. But you're saying, you're saying it's going to go up and it's going to go down. I don't know which way it's going to go. I'm telling you how it unfolds, and be ready whichever way it unfolds. Who can tell the future? Nobody. So, short term. So this and this, right? So this tells me something's got to give. If I want to eyeball levels, these two, they stick out, and this is the level we're talking. So if this one fails, I don't chase trend line breaks because they have a lot of fake outs. I'd rather see a break of an actual level to chase. So in this case, if they fall here and then they lose it, now the bears trigger and they chase it lower. When it comes to here, it's going to find some buyers. There's going to be support, and it bounces, and then it's going to face this descending line. They're going to try to bring it down to here. And then if this is lost, now you have an inverse cup and handle that could drop it this much. What? Yeah, I am not making this stuff up. This is what happens. So this will be another battle zone after the fact, on the second bounce most likely. Now the upside scenario. It unfolds exactly the same way, only mirror image. So if the bulls prevail and they break out from this trend line, again, I don't chase it, me personally. Some people with harmonic skills that can forecast this and they have a system, fine. I'd rather see a break of the levels, at least this one first. So what is that? I can't read it here. 53, 52. If I want to be safe, I'd wait to here. If they break out from here, same as this one, then it's a legitimate breakout, and then test it for footing and then go. This will be the last ditch effort on the bears to shoot it down, but the bulls will prevail and hit some sort of a level of selling. So it looks like there'll be heavy selling up here. Clearly that's all-time high, I think, and these candles here will matter. So anywhere up here is going to find a lot of sellers, and then they'll bring it down and they'll hit this now hopefully ascending higher low trend and see if they can come back here, and guess what they have? A cup and handle instead of an inverse cup and handle. So a dead bug or a regular looking bug. Those are the two scenarios. Which one do I pick? Neither. I wait for the breakouts. One here and one here, or lower. It depends on your guts and how fast you are. So if you're a really fast trader, so you go into the 5-minute increments and you look at the chart really granularly, and now you have action lines. I can see that this is trigger 1 to trigger 2. I can see that there's no control right now on the 5-minute. Like, machines are probably not deciding which way they want to side, but what is this here? So something's going to happen here. This blue-red thing is just a regression line. It's just a visual representation of like who's in control. It's not actionable. Like, it's not this is the bottom and this is the top, therefore I need to exit. It's just a visual reminder that it's going to face some selling if this gets up to here. Reversion to the mean, that's kind of a statement. So based on the price action here, I can see that it's stuck in muck from the volume profile. So that's the area of interest right now. They're going to ping pong until they breach one side or another. So pick your levels that stick out, stand out. This one stands out, this one stands out. Same with this one. This whole area is supply. So when it gets up there, people are stuck, they're going to fight for it, and becomes the potential trigger up. So have the balls to chase the breakout one way or another. So if I'm investing in a coin, I don't get shaken out on the downside because I don't load up all my positions at once. This is the idea like gold. Eons ago, the idea, how do you invest in gold? A little bit at a time. That's what people said for decades, centuries. A little bit at a time, right? So now this is the same concept. If I want to own this coin forever, why dump it all at once? If I have $1,000 in my crypto account, I should nibble $200 a piece here and there. So, and I don't add like overnight. I add when the difference is big, either in time or in value. So if I bought here and it fell 50-60%, fine, maybe I can add. But if it did that in an hour or two, I don't know if I should add. Clearly I'm missing a piece of the information. That's just too much. So either like a month in between or a big difference in price in between. That would be me adding. And I should resist. Oh my gosh, it's rallying. I should have added. So what? I'm already in. Can't get everything. So let it run if you think it's running ahead of you. Anyway, so this is the concept that I would follow trading these things. I do not own Doge or anybody that, do I know people? I'm sure I know people who are trading Doge. They discuss it in my chat room, to which there is a link down below, advertising. It's not free to be in the chat room, but we have fun all day, I promise you, and we find a lot of opportunities. And it is free to try out for 10 days. So click on the link, it'll take you to PayPal, $0 for 10 days, cancel anytime. If you don't like it, out. The reason why I have it through PayPal is because I want to make sure that you're real and not somebody going in there to muck up the area. We have almost 300 people in there, and I owe them that as much. Later, bye.